Ladies and gentlemen, you're all welcome. My name is Conor Sheedy, and I'll be presenting today's Southern Talks on the topic of evolving approaches in the Middle East to an increasingly multipolar economic world. On behalf of, excuse me, on behalf of General Gulic and all of the staff here at the NATO Strategic Direction-South Hub, or more simply the Hub, I would like to extend a very warm welcome to you all and thank you for joining us today. Today is the 8th of the Southern Talks. If you've not seen our previous ones, you can find them easily on our YouTube channel at #NSD-Hub. So today we are streaming live on our YouTube channel and also on our LinkedIn page. We're very much happy when people send us questions during the open discussions towards the end of this hour. On Zoom, you can use the chat box, and on LinkedIn, you can use the comment box. We'll do our best to answer all of the questions. And so to today's event. We're honored and delighted to have Dr. Robert Mogielnicki with us today here from the United States. So good morning to you, Robert.
Good morning. Thank you for having me.
No, it's our pleasure, our pleasure. So, brief introduction. Dr. Mogielnicki is a senior resident scholar at the Arab Gulf States Institute in Washington, an adjunct assistant professor at Georgetown University's Walsh School of Foreign Service, and a term member of the Council on Foreign Relations. Dr. Mogielnicki is the author of a political economy of free zones in Gulf Arab states, from 2021, and he is currently working on an edited volume about the political economy of sovereign wealth funds in the Middle East and Asia. He holds graduate degrees from the University of Oxford, a DPhil from Magdalen College, and an MPhil from St. Anthony's College. And he earned his BA in Arabic and Government from Georgetown University. Quite an impressive CV.
Thank you.
So, Dr. Mogielnicki, perhaps you would like to tell us a little bit about what you are going to discuss with us today.
Great. Thank you, Connor, for having me. It's a pleasure to be here. I've prepared some opening remarks here for the first few minutes of our conversation. And what I'd like to do in those remarks are three objectives. The first is to contextualize the discussion by talking a bit about BRICS, the recent invitees from the Middle East and North Africa, and some of the considerations that these new invitees from the region used to think about whether they wanted to formalize their participation within this group. I think that does a good job in moving from the first part of the remarks to the second main objective, which is to provide some useful ways for thinking about the MENA region's political economy. This is a broad topic, so I'm going to put forth a couple of different guiding assumptions that I've used to inform my analysis, and I think will be very helpful, not just for today's discussion, but also for the various audience members. And then finally, that's going to lead to the third objective in these opening remarks, which is really to kickstart the conversation about MENA countries' global economic partnerships. How are they evolving and where are they headed? And we're going to talk about China, we'll talk about Russia, we'll talk about India, but not just those three countries. I think there are other actors on the world stage to discuss as well. So those are the three objectives, and I hope in a short amount of time, you'll feel that I did a good job accomplishing those 3 points. So I'm sorry, Connor, you're on mute. Is that okay? So can I take things away?
That's fine. I have no doubts that it's going to be excellent. I'm sorry. I put it on mute because there are some noises around here and sometimes forget to switch it back.
No problem. Great. So let's take it back to the beginning then with the first point. I'm framing this our broader discussion today around the BRICS group, or more accurately, a BRICS Plus, or an expanding BRICS group. Now, some of you who have been following these developments know that last year in August at a BRICS summit in South Africa, we saw an invitation extended to several different countries to become part of the larger BRICS group. We saw Iran, the United Arab Emirates, Egypt, Saudi Arabia, Argentina, and Ethiopia being formally invited to the group. Now, it's an interesting kind of invitation process. The invitation was extended. We saw participation amongst a member of these invitees. Over the last couple of years, there have been examples of deepening engagement and participation in these summits and dialogues. But the formal invitation came and said, essentially, at the beginning of the year, if you've not declined the invitation, the expectation was that these countries are going to formally be part of BRICS. Now, Argentina declined for its reasons. Saudi Arabia has not formally accepted, which I'll get into in just a minute. But the other countries, the other 4 countries have, as far as I can tell, have accepted. And this is, you've seen kind of formal recognition of that acceptance of the invitation on government websites and in statements from officials. So we have, a good chunk of those invitees accepting that invitation. Now, my take on these invitations from the BRICS, the founding BRICS members, and this newly expanded group to include Middle East and North African countries is that the Gulf and other Middle Eastern states that are engaging with BRICS in this way, they're looking to increase their global clout and also tap into new economic opportunities. But here's the important caveat. I believe that they're doing it in a way that is trying to, that minimizes risking their traditional allies and partnerships. Allies and partnerships with the US and European countries in particular. Now, I say that because for a number of reasons, which we'll get into today, but this deeper engagement between MENA countries and BRICS didn't just happen overnight. This is not necessarily a radical paradigm shift that we need to be terribly concerned about. Over the past couple of years, there's been deeper engagement between MENA governments and BRICS. Like I said, participation, dialogue, greater involvement in summits, and indications from officials that there is very much an interest in closer collaboration with this grouping of countries. We've seen a number of MENA governments working with the BRICS lender, the New Development Bank, and that's been ongoing for a number of years as well. And I think I would also put the deepening cooperation between a number of MENA states with the Shanghai Cooperation Organization into a similar bucket, although there are, of course, important differences between BRICS and the Shanghai Cooperation Organization. But again, it's another example of MENA governments engaging with a grouping of countries in a way that it has created some consternation in Washington and in European capitals. Now, I think that this approach, trying to increase global clout, open up new economic opportunities, but doing it in a way that doesn't risk put in serious jeopardy, your traditional partners, this can be a tough balancing act. And I believe that the case of Saudi Arabia illustrates this challenging balancing act very, very well. In Saudi Arabia, it's unclear. It's kind of it's unclear what its role in BRICS is. It did not formally accept the invitation. Actually, it was assumed that Saudi Arabia had joined, and then officials came out earlier this year and said, Saudi officials said, actually, we haven't officially joined. They didn't officially decline either. So, I think that the best way to look at the current situation and Saudi Arabia's positioning relative to BRICS is that the country is trying to balance competing priorities. And right now, we know that, at least from the reports that we're seeing, that the Saudis are working very, very closely with the US on you could call it a defense deal plus a mega deal involving Israel, the Palestinians, the US, and Saudi Arabia. There are a number of different names for the discussions that are going on about a larger agreement that Saudi Arabia is part of. But I think that at the moment, those types of engagements with critical established partners like the US is the priority for Saudi Arabia at the moment. And I think that the lack of doubling down and formalizing a BRICS membership at this particular moment is an indication of how important that partnership is and will continue to be. Now, I don't think that means that Saudi Arabia will do anything to offend BRICS members. either. I do expect over the long run, countries like Saudi Arabia and other Middle East and North African countries will continue to engage with these groupings, will continue to find ways, like I said, to increase their political and economic power in the international system. And they see multilateral groupings like BRICS, like the Shanghai Cooperation Organization, as one way to do that. But I will emphasize, not the only and not necessarily the most important way. So that brings me to the second part of what I wanted to discuss in these opening remarks. The Middle East and North Africa is a big region. And if we're talking about the political economy of the region, I think one needs to have some working assumptions to understand this complex region. And my working assumption is that the MENA region is one of sharply diverging political and economic trajectories. And I've come to this assumption, I've used it, I've gone back again and again to this kind of guiding assumption to inform my analysis, because I think on one level, you do need a broad way of looking at this region on the one hand, but you need to couple that with the reality that there are very important nuances and differences between Middle East and North African states. And I think thinking about the region in this way, that there are sharply diverging political and economic trajectories, is a way to reconcile those two, in some ways, contradictory analytical approaches. Or at least, if not contradictory, they can be competing at times. Politically speaking, so I'm just going to flesh out what I mean by this and give us some important points to think about as we continue the conversation today. Politically speaking, what I mean by kind of the sharply diverging political and economic trajectories in a positive direction would mean the states that have strong, centralized, and effective governments. Effective, not necessarily in the sense that some of us in Washington or Europe might think about providing robust democratic political systems, but effective in terms of kind of policy making. Those states that are able to produce policies that provide for the kind of social and economic welfare of their citizens. On the other hand, we have countries that are in the midst of ongoing conflicts or have recently emerged from conflicts and are bogged down in processes of post-conflict stabilization and reconstruction. Many of these countries have weak or ineffective governments, brittle political systems that I think importantly are unable to provide adequate services, social safety nets for their citizens. Now, those are kind of two different paths. This is a spectrum, of course. So we could kind of line up countries on this political spectrum from kind of strength to weakness. I think that's a useful way for approaching the region. But you can't just think about the politics. You have to think about the economics, and that's, I think, one of the strengths of a political economy approach to the region. Think both about how political variables and economic variables can be used to understand outcomes. Economically speaking, what we see in the region are, on the one hand, very wealthy states. Many of these are oil and gas producing states. Many in the Gulf, in GCC countries. These countries have strong fiscal buffers, robust economic growth. You see in many countries large sovereign wealth funds, which we'll talk a little bit about later today. And by and large, these countries also are dealing with relatively manageable and positive economic indicators. Their demographics are generally viewed as a net positive, not a significant challenge for the governments. Low levels of unemployment, an ability to attract FDI and interest from investors from different parts of the world and in different sectors. That's the positive story. There's also a negative story on the economic level. And I mean, there are some states that are in dire situations. I mean, some of these countries, to put it frankly, are really stretching the definition of what constitutes state failure. I mean, if we look at a Lebanon, for example, and these, and then there are countries that we know are in dire situations because they're in the middle of ongoing conflicts, as in Yemen. But there are also countries that are teetering toward very concerning situations because of systemic challenges within their economy. I mean, high levels of poverty, high levels of unemployment, massive demographic challenges that the solutions look very difficult. Look to be very difficult in the future. I mean, these countries, the small ones like Tunisia, but also the very large ones like Egypt, I believe would fall into this bucket. And there's a lot of other issues we could think about too, on sustainable subsidies, currency issues, bloated public sectors, the like. But I think all of those issues, this is just to put some meat on the bones for today's discussion. That could be a whole nother conversation, and hopefully one that some of your audience would be interested in having at some point. Now, why I brought all of that up and that approach for thinking about the region is, to my mind, the relative strengths and weaknesses on a political and economic level of MENA states impact the position and the influence that these states, and by extension their governments, have in the international system. So, I mean, it's kind of silly to jump right into where these states fit in the international system without looking at some of the underlying issues that actually inform. Are these countries that are, movers and shakers, are shaping the international system because of the strengths that they demonstrate, or are they being shaped in large part by the international system and by particular actors? And I think both of those processes are going on, and you need to keep that in. We need to keep that in mind as we move forward. So moving forward, I'd like to touch briefly upon some of the motivations that are behind MENA countries' engagement with economic and security partners that go beyond I'm saying the traditional ones, but let's just say that go beyond the US and Europe, so to speak. Those partnerships with China, with India, with Russia, and with other countries. And now I'm working on an article right now for the Carnegie Endowment for International Peace. It's part of a compendium on great power competition in the Middle East. So I should have a lot to say on this respect, but this article actually looks at Chinese and Russian influence and interests in Gulf countries and across the Middle East. And I think today's discussion is actually trying to make sense of a similar process, but looking in the other direction, really looking from the Middle East and North Africa outward. But again, that multi-direction, that kind of I think these relationships are a two-way street. You have to think, today we're going to think a lot about how the Middle East and North Africa connects with the rest of the world. But in doing so, we should keep in mind that it's important to think about how the rest of the world actors and international actors look to increase their influence and their engagement with the Middle East region. Now, I think from the Middle East and North Africa perspective, many MENA governments and other prominent actors within these countries, they increasingly view the world as a multipolar one. This is the worldview that a number of actors in the region find very appealing and very convincing. I think it's a worldview that gives a lot of agency and power to middle powers, so to speak. And I think that's one way of thinking about why this worldview has taken hold and is being actively promoted within the region. And the follow-on from this worldview, or at least the result of it, is that these governments believe that in an increasingly multipolar world, not only should they, but they must maintain a diverse network of global partners. And that, by and large, I think that goes a long way to explaining some of the forms, the new and evolving forms of outreach that we've seen from the Middle East and North Africa to a number of these partners, China, Russia in particular, in ways that sometimes strike us in Washington or maybe in capitals across Europe and Brussels and other European capitals strikes us in ways of, well, what's going on here? What are the motivations here? Don't quite understand that type of outreach, these form of partnerships that could potentially jeopardize, very important relations with a security partner like the U.S. Well, on the U.S., partnership with the U.S. and the U.S. acting as a security guarantor in the region still is very, very important. But again, there are these new trends that are emerging and this growing, I guess, view within the region that the world is a multipolar one that I do think we need to keep in mind and should not be discounted. And that gets back to the point that I mentioned, that this increasing engagement to increase global clout, to open up new economic opportunities, it's being done in a way that also mitigates the risks against really creating a hard, creating a hard split with other partners that are still very important to MENA governments. But they view as, well, we have these long-standing established partnerships. We get a lot out from an economic level, from a political level, from a defense and security level. We don't want to reduce those partnerships. We don't want to minimize those partnerships. But we see a lot of room to grow in other parts of the world. So I don't really buy the claim, and I don't think a number of our audience members should either, that MENA governments are looking to abandon the U.S., for example. I just don't think that the evidence, that there's strong evidence there to support that claim. But you can hold, multiple different trends and views at the same time together without saying, well, okay, there's increasing engagement with the Chinese, there's continued engagement with Russia. That doesn't necessarily have to lead you to the claim that these MENA states are abandoning the U.S. What we also hear, especially in the Gulf, is that from Gulf officials is that our partnerships in Asia, and I'm talking about Gulf partnerships in Asia, are much deeper than just our relations with the Chinese. That when we engage in the broader Asia region, we're not only looking at China. We have other important partnerships with India, with Japan, with South Korea, with Singapore. And that's true. I mean, even on an energy level, China is a major energy importer. But if you look at across the region at the different oil and gas producers in the region, China isn't necessarily the most important export destination for these countries. It is for some. But for other countries, we see Japan or South Korea, or even Singapore. I mean, these countries are, in India especially, are in some cases as important or more important for certain energy commodities. Now, China, of course, is a massive economy. It has outsized influence as an energy importer, but it's not the whole story. So I think, to some degree, this view that we hear from Gulf officials say, don't press us too much about our relations with China. We have other, Asian partnerships that are very important to us. I think that there is a certain degree of accuracy there, and we should take that seriously and respond to that view. I think also.
I was just
sorry.
Just on the point there of the growing multipolar economic world. Is it more driven by the fact that there are now more powers more or less on the same level, or is it because their clients are just better at sitting on the fence and getting the best they can from each of the options that are there? Again, looking at it from Middle Eastern countries and MENA countries looking out, rather than the global powers looking in. Who has the power between the two in terms of the growing multipolar aspect?
So this is a good question. I think that the most accurate way to think about this, I mean, you have to separate what MENA governments and their approach to what they view as an increasingly multipolar world, and the types of networks and partnerships that they're setting about to create, what they want to create, from maybe a more objective reading, to the degree that I or anyone else can offer a kind of objective analytical reading of the actual power and geoeconomic heft of these partnerships. Maybe let me refer to some numbers to put this into context. I was looking the other day at Saudi Arabia's foreign direct investment in 2022. And what we saw, and I was really curious to look at Chinese and Russian investments. And how important is Chinese investment in Saudi Arabia? How important is Russian investment? What we saw, Russian investment, minuscule. I mean, over the past couple of years, barely existent. Now, this is according to the Saudi Ministry of Investment's figures. In past years, if we were to go back a few years, there are some years where you see $150 million, for example, of inward foreign direct investment. But annual flows very low. The total cumulative stock of FDI very low. So it's very, in terms of an investor, Russia as an investor in Saudi Arabia, very unimportant partnership. Now, I think these governments, whether it's Saudi Arabia, the UAE, might say certain Russian companies there are some areas where there are certain shared interests, there are strategic sectors that might be useful for economic diversification initiatives that we could tap into moving forward. Now, of course, the Russian invasion of Ukraine has presented a lot of challenges in terms of economic engagement, but I'm thinking kind of before the invasion and longer term. But still, these investments inward, they're, at least in Saudi Arabia, is very small. China is much higher. I mean, some years, I think in 2022, you saw $1.2 billion of inward investments from China. So this, on a just different order of magnitude from Russia. But by far and away, the largest investment partner in Saudi Arabia was the U.S. I mean, significantly larger, multiple times larger than China, both in annual inward flows and the total cumulative stock, and just in a completely different ballgame than playing a completely different ballgame than Russia. So, I guess it's the numbers. I mean, we start looking at these investment flows and these trade flows. The numbers don't really support the idea that these powers are all, whether it's Russia, it's China, it's India, that they're offering Middle East and North African countries a comparable forms of economic engagement. They're not. The engagement is highly uneven, and it's inconsistent and uneven economic engagement. And my sense is that these governments across the region, government officials understand this. Their approach seems to be, we need this partnership, not because we expect to get the same amount of benefit, to squeeze the same amount of value or benefit from each partner, but we can rely on these different partnerships, for different things. And that I think is the approach, and that's probably a more realistic approach, given what we're seeing coming out in the trade figures and the investment figures, and also the areas where there are actually complementarities between these economies. I'll just finish by, I guess we were talking about China, we're talking about Russia, but India's inclusion in BRICS. I mean, if you think about the founding members of BRICS, we also have India there. It's a good reminder that this story, that whether you're interested in MENA countries' engagement in Asia, strategic competition with China and with Russia in the Middle East, there are other big players here. India is a huge economic player. I mean, so I think for all the interest that we've seen over the years in China coming from the Middle East region, whether it's sovereign wealth fund officials who want to ramp up their investments in Asia and are looking at China in order to do so, there's a similar amount of interest in India. I mean, India poses different challenges too. There are a tremendous amount of regulatory issues and other economic issues to get into Indian markets. It hasn't been easy, but by the way, it hasn't been easy in China either for a number of Middle East economic actors. But India continues to be a very important player, especially for the Gulf. There's a longer standing, more established relationship with India than there is with China. I mean, you've got several million Indian expatriates working in Gulf countries. That provides, on the ground socioeconomic linkages and connections in a way that just between India and Gulf countries in a way that you just don't see with China. So I think that India, and if we are to bring it back to BRICS, and I don't think that all roads should bring us back to the very loose grouping of country grouping of BRICS, but I think India's inclusion there is a useful reminder that there are other important Asian players that we need to keep in mind when we're thinking about these partnerships. And the last point I'll say is, you mentioned my book on sovereign wealth funds. There are also some other interesting kind of smaller Asian countries that are, if you're able to dig deep or interested in digging deep, you can find these kind of smaller countries popping up as well. It's not just the big boys of China and India. I've been looking deeply into Oman's sovereign wealth fund, the Oman Investment Authority, and it has a number of joint ventures with countries like Vietnam or Brunei that also offer some new actors to put onto the table. Again, I mean, these are important players, but they don't always make it into the big media articles about Middle East and Asia relations. But nevertheless, they're there, and I think they're important variables to consider. So why don't I leave my opening remarks there? I've probably pressed our time a little bit, and we'll move to the next stage.
Yes, thank you very much. So far, great. I was very interested to hear you pointing out how important getting the political aspect and the economic aspect together, especially in light of the incredibly different situations in a country in post-conflict rather than a country that has a strong economic background and still there. So please move on.
So I think for the next stage of our talk, we wanted to discuss some of the key entities and policy tools that are used by Middle East governments and business actors to operate in, as I've said, what they perceive as this increasingly multipolar world. Maybe to do that, I should I'll pull up my PowerPoint at this point in time. It just has some visual aids here, so not to scare anyone about falling asleep in front of a PowerPoint here. So let's.
Yeah, I think we can handle 2 slides. I don't think that'll.
Yeah.
That's not going to put anybody off.
All right. So. All right. Perfect. So I'm sharing it here.
Perfect.
How's that coming up? Okay, great. So.
Thank you.
We just I just included a couple of short visual aids, but I mean, we've been talking on a very broad level. We've been talking on a country level, but I think really where the rubber hits the road is when you go beyond the country level and you start thinking about, okay, that's great. This is a good theory. This is a good way for thinking about the region, but how are MENA countries or the governments in these countries actually engaging with global actors in this, what they might perceive as an increasingly multipolar world? What are those entities? What are those policy tools that they are using to do this? And I guess you could think about that as, what are the geoeconomic strengths that these countries have? I mean, what are the economic strengths that these countries use to accomplish economic and geopolitical interests? And I would say that, I mean, there are many, but there are 3 or 4 that are worth mentioning here. Sovereign wealth funds, and then free trade agreements and special economic zones, which you could put in one category. You could think about as 2 different separate categories. And then new trade corridors that we're seeing emerging in the region. Those are the kind of 3 or 4 that I'd like to highlight here, that I think go a long way to describing the kind of, you could think about it as the emerging geoeconomics of the region, these emerging geoeconomic tools of the region. And that's why I brought up this this graph here about sovereign wealth funds in the Middle East. I mean, these are, it should be, I mean, accurately, I should say, sovereign wealth funds in Gulf Cooperation Council countries. This isn't a complete list, but I think it does a good job of showing how sovereign wealth funds break down across the region. And I also will just flag a piece I recently wrote for my institute. You can find it on our website. The title is called the Emergent Gulf Sovereign Wealth Fund Global Tech Nexus. And essentially the idea is that while sovereign wealth funds in the region have invested in promising technology firms and startups for a long time, for many years, what we're seeing now is that regional sovereign wealth funds are increasingly playing a much more assertive role in trying to reposition, or I wouldn't even say reposition but trying to position their countries as emerging hubs for emerging technology hubs. And that rather than just playing a kind of passive role, investing in companies and seeking equities, stakes in companies, they're playing a much more active role in actually trying to grow domestic technology sectors or to be major players and influencers in the global tech sector. So I don't need to go into that in too much depth because I was able to do it much more articulate in a more articulate manner in an article on my website. But if you're interested in that connection between sovereign wealth funds and global technology, I would encourage you to go to AGSIW's website. But bringing us back here, these numbers are worth taking stock of. These numbers are in billions. So I mean, Abu Dhabi's sovereign wealth is roughly $1.5 billion. That is just the cumulative estimates based on Global Sovereign Wealth Fund. There are a couple of different platforms that are pretty good and pretty accurate. This one, I believe, relies on Global Sovereign Wealth Fund. That figure is the cumulative assets under management of just 3 sovereign wealth funds: ADIA, the Abu Dhabi Investment Authority, Mubadala, and ADQ, which is a relatively recent sovereign wealth fund in Abu Dhabi, but it's been behind a number of very, very interesting, high-profile initiatives and acquisitions. It backs the G42, which is the Abu Dhabi-based technology holding company, which Microsoft just invested in $1.5 billion, and a senior leader from Microsoft is now on the board of G42. So there's a very interesting relationship there. G42 was also behind the large, the multi-billion-dollar investment, UAE investment in Egypt. Some of you might have followed 𝒃𝒆𝒍𝒐𝒘 investment on the Mediterranean coastline that recently went through. So an important player in the region and internationally. So Abu Dhabi is a big player here. And in terms of sovereign wealth, it has the most sovereign wealth in the region, and it's stretched out over a number of different funds, and it allows different funds to play different functions. Saudi Arabia is in a different category. Everyone likes to think about the Public Investment Fund as being this massive fund. Well, it's not actually. The sovereign wealth fund is not quite as large in terms of assets under management as Abu Dhabi funds. Still a big fund. I mean, recently the assets under management jumped up from about 750 billion to over 900 billion because there was an asset transfer or a share transfer from Aramco, the national oil company, to the PIF. But this still is a big fund, but it's just one fund. So Saudi Arabia has one primary sovereign wealth fund with a lot of different obligations, both within Saudi Arabia and internationally. Kuwait, roughly hovering around there. These both the PIF and Kuwait hovering just under $1 trillion there. It's a much more conservative fund in the way that it invests than other sovereign wealth funds. And then you have the Qatar Investment Authority with 500 billion. This is for, Qatar is a tiny country. It's got a massive sovereign wealth fund. So that gives it a lot. That gives that fund a lot of sway in both within the region, but in as an international investor too. And then we have the other funds, and this, I think, Oman and Bahrain, they're on a much different order of magnitude. You're talking just under $50 billion for Oman, around $20 billion for Bahrain. These are smaller countries, not as wealthy as your Abu Dhabis, Saudi Arabia, Kuwait, Qatar. They're playing a different game with sovereign wealth funds. They still have sovereign wealth funds. They're very important for the political economy of these countries. But they're not operating on the same order of magnitude. They're not able to kind of penetrate markets and influence markets in the same way that we see these other sovereign wealth funds being able to do. Okay, let's see here. Okay, moving on. So I spent a good amount of time talking about sovereign wealth funds. I want to shift gears a little bit to talk about special economic zones. And I'd say special economic zones and also free trade agreements, they fall into a similar bucket, but let me take them one at a time. Special economic zones are interesting, are interesting geoeconomic tools to think about, because these are one of the ways in which countries can decide to tweak regulations, to create new regulatory frameworks and commercial environments that they believe are going to be conducive to attracting investors, firms, even international visitors and tourists. And this is one of the ways that countries, even the countries that have relatively unattractive investment environments, can find ways, instead of trying to reform entire systems and entire countries, entire regulatory environments, can look to make improvements at the margin in particular areas, and try to attract investment, into specific zones, these special economic zones or free zones. Some people like to use a broader term, economic zones, rather than try to tackle kind of much broader challenges. And we see this happening quite a lot in the region. NEOM, for those of you who are following the region, you might have heard about the special economic zone in Saudi Arabia, NEOM. And that's why I put this up here, just to show the geostrategic location of NEOM, here in the northwestern corner of Saudi Arabia, very close to the Sinai Peninsula, close to Jordan, close to Israel, also close, you've got coastline on the Gulf of Aqaba, and also very close to that really important Red Sea corridor leading up to the Suez Canal. This is just one example. It's a very futuristic mega city that is in a geostrategic location and is denoted by this special economic zone status. We have other examples across the region too. I noted the Ras Al Hikmah deal, which is the result of Egypt's land deal with the Emirati Sovereign Wealth Fund, and massive investments in Egypt's kind of northern Mediterranean coastline. And from the reports, the early reports that we can see about that deal, is that area is going to be considered a defined investment zone and have a number of subzones to attract investors and firms into and residents who are interested in particular sectors in different activities. So I very much expect that we'll see this type of policy approach being applied to this investment initiative as well. And I don't think it's a surprise either that the Emiratis are involved here, because if you think about special economic zones in the Middle East and North Africa region, you can't talk about this topic without talking about the UAE. Most of the region's special economic zones and free zones are actually present within the UAE, and in particular within the Emirate of Dubai. Many people will probably know the Jebel Ali Free Zone, both for its kind of commercial, its commercial reputation, but also because the port is also an important player for a number of partners, military partners for the United Arab Emirates. I know an important port of call for many navies. I would just say that Jebel Ali Free Zone in the UAE, it's, to put some figures on how important it is, it constitutes 33% of the Emirates' entire GDP. So 1/3 of the Emirates' GDP relates back to this one particular free zone. And according to the last estimates I looked at, which I will say are a year or so old, and that they might have changed, But if you were to think about Jebel Ali as a country in and of itself, its most important trading partner would be China. So the Chinese companies in trade with China is a really important, is the most important kind of geographically delineated commercial activity for the free trade zone. And you see a lot of Russian companies over the years. That all the time I've spent looking at free zones, there are a lot of Russian companies who set up in free zones, not necessarily in the more professionalized free zones with more stringent regulations like Jebel Ali Free Zone, but across the broader region, you do see a lot of actors, Russian companies setting up in free zones. It's a popular way to gain entry into Middle Eastern markets. Let me just say a brief note on, I can now get myself out of here before I forget. I think I've pivoted away from the PowerPoints. There are also free trade agreements that are being used. And this is another way that these countries can leverage their economic strengths in a way to form new partnerships. The GCC has been working for about 20 years on a free trade agreement with China. You can look at that in a number of ways. You could say, well, you spent 20 years doing something because it's very, very important. You could say you spent 20 years doing something because it's very hard to do, and maybe you'll just abandon the plans. I've heard Chinese officials describe it as, we've been able to spend 20 years making tremendous progress and working very closely with our partners in the Middle East on this great initiative that's going to happen very soon. There are a number of ways to think about that, but I think the fact that this negotiations continue and have continued for so long do show that there's a certain degree of interest, albeit also a lot of challenges to kind of push that free trade agreement over the finish line. The Chinese want the free trade agreement mostly for prestige reasons, to be connected, to formalize their relations with Beijing's relations with important global blocs like the GCC. I think the GCC states, there are different considerations. You have the individual GCC states that are all trying to protect their own interests and then have to come together and agree on a broader multilateral level to push that FTA over the finish line. We've also seen examples of recently in December of Iran signing a free trade agreement with the Russia-led Eurasian Economic Union. So this is not just a GCC story. Even Iran is also looking to utilize free trade agreements to advance some of its interests and to deepen partnerships. The last thing I'll say on this point about kind of geoeconomic tools is it's worth keeping an eye on the new trade corridors that are emerging in the region. Just in the past couple of weeks, we saw some very interesting news related to Iraq and Turkey creating this kind of a new trade corridor, overland trade corridor called the Development Road. It has support from the Qataris and the Emiratis. So it's this kind of deal between the Qataris, the Emiratis, the Iraqis, and Turkey. I think that there are a lot of different competing interests that are part of this initiative, and I have my doubts to the degree that this will materialize as a really impactful initiative. But that shouldn't distract us from the broader point that countries across the region are thinking about trade corridors as one way to advance their kind of economic and national interests. And I find it very hard to believe that these new initiatives are not also connected to the fact of new tensions in the Red Sea that are creating trouble for other really important maritime trade corridors. The ongoing concern that Iran could cause trouble in the Persian Gulf as well and disrupt that important, at least energy trade corridor. So these are all different considerations that regional countries are thinking about, and the regional initiatives also overlap in some respect with broader trans-regional initiatives that we've seen emerge over the past few years. The IMEC, the India Middle East Economic Corridor, being one of them, but also the Belt and Road Initiative being a longer, a more established initiative. These are existing initiatives that the Middle East and North Africa and in varying degrees into certain parts of the region are part of these initiatives. And I think any new initiatives that actors within the region create are going to have to interact with and engage with these existing global development initiatives. So why don't I turn it over to you, Connor, for some additional questions?
Thank you very much. Thank you very much. I was riveted by that. Very, very well explained. Somebody has sent us in a question here, which perhaps the easiest way is for me to read it out rather than try to summarize. So, how are the economic strategies of the Gulf Cooperation Council countries adapting to the challenges and opportunities presented by the increasing economic presence of non-Western powers like China and Russia? And in what way are technology and innovation playing a part in their new approaches?
Okay, I think maybe I'll start with the technology point. I mean, technology, well, this goes back to the question of means. And I would say that if we think about the region, there are some countries that are in a much stronger position to invest in technology, to deploy that technology, across the government and across their societies. And there are some countries that are just simply not at that stage, given other urgent priorities, and just a lack of capabilities, whether it's financial or government capabilities. For the countries that are able that are able and interested in investing in technology, there is a massive interest. I mean, we started to see that interest emerge several years ago with digitization. So the governments across the region said, we need to digitize our government processes. That's pretty basic approach. Then as the coronavirus happened, there was a greater focus on, well, actually, we need to create robust, resilient digital economies. Digital economies that are incorporating health tech, ed tech, agro tech, to make our societies and our economies more resilient. And that made sense given the context, the kind of broader context of the coronavirus pandemic. Then I think as the world emerged from the pandemic, there was a sense that, okay, especially countries with the fiscal means to do this, investing in technology is not just something that should be done during the bad economic times, the challenging economic times. This is something that should be done, during good economic times as well, because we're going to be when we're in a strong position, economic position, we need to really double down on our technology-focused investments. And I think that kind of brings us up to what I tried to flesh out in that article I referred to about this growing Gulf Sovereign Wealth Fund and global tech nexus, that I think certain countries across the region are saying, hey, we don't actually just have to be the ATM for investors, that are actively involved in the global technology sector, or we don't have to be giving huge incentives necessarily, or to multinational technology firms just to come in and not to actually provide benefit to our societies, or we don't have to invest, be massive investors in technology-focused funds and companies, buying huge stakes in companies without getting anything in return. So now a number of countries are starting to think a little bit more, or the government officials in these countries are thinking harder about how they can redirect the benefits of their investments, technology investments, back into their societies. And we are seeing many examples of different development initiatives having a strong technology focus. I think that that's one outgrowth of that strategy approach on the technology side. Right.
And the way you were focusing on countries maybe looking outward from a technology perspective, we're coming fairly close to the end of our time, unfortunately. And I was wondering, from a NATO perspective, like what proactive engagement, what approach would you consider possible, probable, likely to have a good effect for engagement with MENA governments? Perhaps, obviously, not on the economic front, so to speak, but all of the other things that NATO is so well known for.
Yeah. Okay. Well, I think what I'll do is just maybe put forth a quick list some of the risks and opportunities facing the region, and then highlight maybe 3 or 4 areas I believe NATO could play a role or could go about proactively engaging with the region. But because I know a number of our audience members are much more involved and steeped in NATO's capabilities than I am, I want to put those risks and opportunities out there because maybe it will generate some ideas that I haven't thought of.
Different perspectives are always appreciated.
Good. So I think on the risks, we didn't even talk about it today, but it could be a whole conversation. The ongoing conflicts in the region, tensions, Israel, Gaza, the Red Sea, prospects for escalation in Lebanon and in Iran, to say the least. These are big. This is big risk. Climate change is an ongoing and a longer term risk, and a number of countries across the region are very vulnerable to climate change. I think there are leadership and governance challenges. Probably not an area that necessarily NATO is going to be directly involved in, but it is an ongoing kind of political risk. Energy and food supply shortages and disruptions. I think those are also related to conflicts in many respects. Yeah. And then, big bets on the wrong industries, betting on crypto and digital assets, maybe that don't pan out. Big projects that aren't the right projects, that don't materialize as planned. New administrative capitals, maybe that don't make sense. These are all risks. And I throw those out there for potentially some food for thought. But there are also opportunities. I mentioned new sub-regional forms of integration. There are these kind of new trade corridors emerging. There are different initiatives trying to stitch together parts of the region where possible that aren't mirrored in conflicts. So I think there's some initiatives there that present opportunities. They're young populations. Sometimes people think about the demographics and having large young populations in a negative sense. I think there's a way we can think about them in a positive sense too, and we should. How do you utilize the capabilities and the aspirations of large young populations? I think we have to think about it in a positive way, or it's very depressing. There's also a building sense of economic momentum in the region, especially in the Gulf. So how do you build on and capitalize on that growing economic momentum? And within that, there's a heavy focus on renewables and sustainability. I think the war in Israel-Gaza has kind of turned a little bit of the shift away from environmental concerns and climate change. But nevertheless, that focus on renewables and sustainability is there, and we should continue to press on that initiative. On those fronts. And finally, there have been a number of major events in the region, from the World Expo to FIFA to COP, that have shined a relatively positive light on the region. I mean, there's certainly room for criticism too in how those events unfolded, but I think by and large, these events went off pretty well, smoothly. Were safe, presented safe way for attendees to participate. And I think that also was an opportunity that will be capitalized on in the future. So now, with those in mind, and we haven't even talked about the global energy transition. Global energy transition, big topic too. That would be both a risk and an opportunity. So I'll easily bow out of that one by saying it fits into both categories. Now, how, off the top of my mind, might NATO proactively engage? I think on the front of cybersecurity, there's a lot of opportunity there, a lot of interest in cybersecurity. And I think relatedly, but it doesn't only include cybersecurity, how can NATO potentially help these countries and their governments safeguard critical infrastructure, energy installations, critical infrastructure, but also desalination. I mean, these are some of the biggest desalinators in the world in terms of biggest producers of desalinated water. Citizens and residents and visitors depend heavily on desalination. This is a critical infrastructure that needs to be protected. I think NATO probably has some ways for helping policymakers and officials think about that. And then finally, I'd say the success of many of the economic policies, development initiatives, and also economic relationships we've talked about, they do hinge on a certain degree of peace and security in the region. I think this applies both to the strong states, Saudi Arabia's Vision 2030 being a good case in point, but also the weaker ones with fragile political and economic institutions, Tunisia, Libya, Egypt, Jordan. To the degree that there can be more peace and security and not less, that's going to help provide an economic boost where possible. And that's another area I would say, I mean, where I can see an immediate role for NATO.
Thank you. Thank you very much indeed. Time is up, unfortunately.
Went by quickly. Went by very quickly.
It does. It always flies when you're having fun. I have to say, I particularly enjoyed hearing everything you mentioned about the perspectives of what multipolar truly means to the multitude of risks and opportunities and variety of countries. And it does certainly explain why so many different countries are learning better not to put all of their eggs in the one basket and hedging their bets, so to speak. I appreciate you giving us your unique perspective on what it is that NATO can do in these circumstances. Unfortunately, we have to draw the event to a close. So for all of you who have been here with us, thank you so much for joining in. I would like to say how immensely grateful we are to Dr. Mogielnicki for his invaluable time and for such an extremely lucid and understandable presentation on topics which are by no means things we read about every single day. This webinar will be available in the next few days on our YouTube page at #NSD-Hub. With that, I'm afraid I'll have to bring this event to a close. Thank you very much again, Dr. Mogielnicki.
Thank you for having me.
Goodbye, and I hope to see you all very soon. Bye-bye.
Take care.